But the other space that we're looking at this morning is the auto space, because the auto stocks have started to correct. In fact, this year so far, M&M is the biggest nifty loser. The stock now is down almost about 7-8% this year. And, Basudeb Banerjee, who's the auto analyst at ICICI Securities, joins us now to talk more about that. The auto index itself is down 5% in a month, Basudeb. Do you think it's because of the possibility of, a weak monsoon, the El Nino, which is perhaps going to derail auto sales further? Is that your base case? And what do you do with individual stocks then?
Sonia, morning. So if you look at auto index has corrected by almost 8% in last 6 months against Nifty falling by 4%. And before that, auto index outperformed by 22%. So definitely this recent correction is combination of three things. One, obviously the market correction on a weak mode. RT norms coming in from April, where in commercial vehicles, 3 to 4% price hike. In select diesel vehicles, price hikes anywhere around 20, 30, 40,000. And last but not the least is where we are coming out of weak rural sentiment for last 18 months. Now the incremental risk of El Nino giving outlook for another weak monsoon and continuation of weak rural demand, let's say, in the specific segments. So all these things combinedly resulting in correction, and valuations of select large caps also moved up very much, leaving hardly anything on the table left. So that's an opportunity for long-term investors to look in this kind of correction.
M&M is one of your top picks, right? I was just mentioning a while back, this month M&M is down about 8% in a single month. You think this is a good time to buy into M&M, or do you think one can get better levels over the next couple of weeks?
So Sonia, if you look at, we had a neutralist stance on M&M in this whole rally. Now, when stock has corrected almost 20% from its highs, and if you do a sensitivity analysis of where Street was expecting somewhere around 6 to 8% tractor industry growth in fiscal 24, because of El Nino, even if you take it to a study where the growth is 0% or minus 10%, still you can't see this kind of valuation levels. So definitely, even if you look at the numbers on a conservative way, 1150 or anywhere below, along with time value of money, M&M is giving a good opportunity. And especially if you look at M&M has cleansed up many of those loss-making subsidiaries in last couple of years. So at least those baggages are no more there in overall scheme of things. Auto segment where demand for the SUVs, XUV 700, Scorpio, still they are operating with a good waiting period, and management is going to increase capacity by December. So M&M definitely is worth having a look in the large cap space in this ongoing correction.
What about Maruti? Because, there are now talks that demand is slowing down, inventory levels are high, bookings are not that great. And Maruti, when we chatted with them, told us that they expect just about a 5 to 7% growth for the industry next year. So there's definitely a slowdown underway. What do you do with a stock like that?
See, the last comment which you made, that 5 to 7% is slowdown for the industry. So it's a relative comment, because long-term car industry growth in India is hardly 5% for last 10 years. In FY23, industry is seeing 20% plus growth. So relative to that, you might feel a slowdown, but on an absolute basis, 5 to 7% growth for car industry in India is pretty decent. So that's a relative way to look at. And so for Maruti, the portfolio, the rural centricity of portfolio is relatively larger compared to the likes of a Kia or even Mahindra or even Tata Motors currently, or leave aside the other premium brands. So definitely the outlook for continuation of weaker rural sentiment will have an overhang on Maruti, where the entry-level models are very much dependent on rural markets rather than the urban markets.
Okay, all right. Well, thanks so much, Basudeb, for stopping by and giving us your view on the auto space. Looking forward to